Hi there, my name is Dennis Voznesenski, and today we're looking at the Grains and Oilseeds Outlook for 2022. And joining me to discuss what's happening with prices is our senior commodities analyst out of Orange, New South Wales, Cheryl Kalisch Gordon. How are you doing, Cheryl?
Hi, Dennis.
Overall, from the research we've done, it looks like grains and oilseeds prices across the spectrum are moving downwards this year as production starts to increase. So whether that's because planting is rising, because of all these favorable prices, or seasonal conditions are improving. Cheryl, on the barley and pulses side of things, what are you seeing as the main takeaways?
Look, we're looking at the global corn price on this for that feed grain demand globally, and we are expecting a resupply, particularly out of the northern hemisphere. Though, we do need to look out for those macro factors and those left field factors that might come into play here, and certainly La Nina and its impact on South America and even into the US is high on our concerns. But on balance, overall, we're looking at about an 8% decline from the strong pricing we're seeing now for CBOT corn over the year. And here in Australia, we expect that to translate into about a 10 to 15% decline for barley prices. For pulses, we haven't seen the upside on for other grains that we on pulses like chickpeas. And we're expecting that market to remain fairly flat with a strong global demand situation not really stacking up there and lots of troubles on the shipping side of things. But for lentils, you have seen heights, but expecting some decline there. So I think it's a declining story, but as you said up front, but in the context of historical pricing, still ending up the year good. How about for wheat?
Well, for wheat, it's an interesting story. Overall, we think if we look at the Chicago Board of Trade wheat prices, which are a bit of a bellwether for what's happening globally, we expect them to decline around 5% from current levels towards the end of the year. But it really depends what type of wheat we're looking at. If we're looking at high protein wheat, the story looks a little bit more rosy than when we compare it to the story for feed wheat. If we take the standard or the most commonly looked at wheat in Australia, APW, and we go to, well, let's take a Kwinana price free in store, we expect that to trade between $330 and $370 per ton, dollars per ton over the next 12 months. And while it's not as great as in recent years, it's still above the 10-year average. So it's still looking positive.
And on oilseeds, we've seen some tremendous pricing on canola. Can that hold up this year?
Yeah, so with oilseeds, well, again, let's go to Chicago Board of Trade soybeans because that's reflective of what's happening globally. We expect that to decline around 12% from current levels. They are quite high at the moment, but as we see more production and maybe a little bit of easing in demand, there may be some downside there. If we look at canola specifically, and again, we go to Kwinana free in store prices, we think that's going to trade down from the current levels of around 840, 850, 830. It's moving about around a little bit at the moment, but we expect it to move towards around 690 per ton towards the end of the year. And that's not to say the long-term fundamentals aren't strong. They still are, like we showed in last year's big report that we did on the 2030 outlook. But this year, you're seeing farmers plant a lot more because these prices are really good and conditions are looking to improve, especially in Canada, where it had that really large drought. Well, I think that's it from our end, Cheryl, in this video. Thank you for being a part of it, and be sure for our viewers to check out the other videos in this series.